Welcome to another quarterly update from the Barwon Healthcare Property team. My name's Tom Patrick. I'm Head of Healthcare Property here at Barwon. And today I'm joined by Joss Engebretsen, the Portfolio Manager for the Barwon Disability Accommodation Fund. Joss, thanks for being here.
Happy to be here, Tom.
So let's start with an overview of the fund. Joss, can you explain please what is the Disability Accommodation Fund and what exactly is it doing?
The Barwon Disability Accommodation Fund is a closed-ended fund that invests in specialist disability accommodation across Australia. We acquire going concern assets or enter into fund-to-own structures for best-in-class disability accommodation, creating great housing options for people with disabilities. The fund has performed very well over the last 12 months. We've achieved a net return of around 7 to 7.5%, with a distribution yield of around 4.5%. This is due to a number of factors, including strong occupancy at our operating assets, rents increasing in line with inflation, and relatively stable cap rates compared to other core asset classes. We're glad to see the fund returns are trending toward our target range as the fund becomes a more established vehicle.
And so what's going on with the fund as we round out the financial year and head into FY24?
It's actually a very exciting time for the fund, Tom. We're about to reach the financial close of our High Wycombe project, where 18 out of the 24 participants have moved in, and we're actually about to settle on our Dandenong asset in the second half of July. Settling those two assets will see the GAV nearly double, and as a result, we've now called the balance of undrawn committed capital from our investors, and the fund's committed equity will shortly be fully deployed. On top of those two assets, we've got some great deals under exclusive due diligence at the moment, which should come into the fund fairly shortly.
Great work. I know our investors are keen to get their capital to work and delivering great outcomes for people living with a disability. Now, let's talk about the latest government price guide review. What are your thoughts on these changes, please?
Yes, well, as many of our investors may recall, the sector was awaiting the final outcome of the first 5-yearly SDA Price Guide review. This was the result of an extensive review of the sector's rents in the face of escalation of land and building costs over the last 5 years. Barwon lodged a submission with 15 recommendations, and it was good to see that the SDA Price Guide review addressed 10 of those. Overall, the changes are positive. The government has increased the price for a number of specialist disability accommodation categories. However, the most significant outcome of the Price Guide review was lifting improved livability funding between 80 to 120% across all categories, and a substantial lift in fully accessible funding. Both of these actions have substantially reduced the income reversion risks for assets in the sector. This should also make it more feasible for many projects across Australia. We've now started doing our numbers, and we are really excited to see over the next 2 years how the sector will continue to develop and the increased amount of supply that will come on that can service a wider part of the participant continuum.
Some questions more broadly. Are you seeing any risk to the SDA program, given all the conversations that are going on, particularly around growth caps on the NDIS expenditure?
Whilst the government has announced a desire for an 8% growth target on the NDIS expenditure, we've always got to remember that SDA is less than 1% of the overall NDIS budget. In the 12 months to March 2023, expenditure on SDA was only $228 million, or 1/3 of the $700 million budget allotted to SDA, so it's running well under budget. SDA is for NDIS participants who are at the highest level of need, so extreme functional impairment or very high support needs. If the government were to undertake actions to slow the growth of the NDIS, we don't think it's likely to fall on the SDA program. Firstly, SDA helps participants' inclusion in society, the very aim of the overall NDIS. But when SDA is done really well, it can actually reduce care costs, providing an efficiency dividend for government. It's for these reasons and the outcomes of the SDA pricing review that we remain very positive on the longevity, necessity and prospects for the SDA sector.
Okay, interesting. So what are the opportunities for growth then in the disability accommodation sector, Joss?
The opportunities for growth in the disability accommodation sector remain significant. The population of people with disabilities is growing, and the demand for disability accommodation is increasing. The recent SDA Price Guide review revealed that whilst there is a $353 million of SDA approved funding out there, only $228 million of SDA payments were claimed up to March 2023. That tells us there's a cohort of participants with $120 million of approved funding that need a suitable home. The government also recognises that SDA is a key enabler for the NDIA to meet the government's commitment with respect to reducing bed blockage in hospitals by people with disability and assisting younger people with disability exit the residential aged care. and SDA provides that suitable accommodation alternative, which is crucial for both of these cases. From the recent government estimates, another 11,000 SDA new build places will be required over the next 5 years, and that presents a big opportunity for investors to help fill that gap.
Absolutely. A lot of work to be done for sure. Any other news that you wanted to update our investors on?
Well, actually, yes. Now that we've deployed all of the committed equity, we are starting the process of raising more capital to continue to grow the fund. Moving forward, we're going to change up the structure a little bit. Instead of being a committed capital structure, we're going to raise capital on a deal-by-deal basis, so the raising of capital is more closely aligned with its deployment. If any of our existing or new investors would like to express their interest in participating in the fund, they should feel free to get in touch with our team who can guide them through the process.
Great, and thanks for those valuable insights today, Joss. Really appreciate all that. That's all we have time for today. Thank you for joining us. We hope you found that insightful, and as Joss mentioned, if you do have any questions on the fund or indeed the fundraising, which is imminent, please do feel free to contact myself, Joss, or indeed anyone from our business development team. Thank you.